G'day guys, welcome back to the Devon Too Good Investing channel. Today in this video we're going to be digging into A2 Milk's interim results, which just came out on the 21st of February, so just a couple of days ago. And we're going to be looking at the results, see how they did in the previous half year. So Australian and New Zealand companies are a little different in terms of reporting compared to the US companies. US companies report every quarter, whereas New Zealand and Australian companies tend to report twice a year. But anyway, guys, make sure you like this video and subscribe to my channel, and let's smash right into it. Let's get right into some of the key numbers right here. So we can see that revenue was marginally lower compared to first half 2021, which was in line with guidance, which is nice to see considering A2 Milk's management have missed guidance and had to change their guidance, in fact, multiple times over the past sort of 18 months. And overall, it was down 2.5%. However, up almost 25% compared to the second half of 2021. So it does seem like the second half of 2021 was a bottom for revenue, and I will expect that revenue will increase sort of period on period, sort of going forward from here. EBITDA down 45% compared to H1 2021, and EBITDA margin was 14.8% compared to 26.4% in the first half of 2021. Now, hopefully, A2 Milk released sort of long-term guidance, and they're looking to get the EBITDA margin back into that sort of low 20% range. And so I guess, look, they got a bit of work to do there, but a lot of this was due to a lot of inventory write-downs, which they have recently finished, and also a change in product mix where some of their lower margin products are now making up a larger percent of the revenue. In particular, the English label infant formula made up a really large percent of their revenue previously, but obviously that business has been hit. The Daigou channel got absolutely destroyed during the pandemic, and as a result, other sort of lower margin parts of their business are taking up more of the product mix, which has also put pressure on the margins. NPAT, which is net profit after tax, it was down 53.3%. And I mean, despite all this, A2 Milk are still pushing out profits. They did make a profit of 56.1 billion. Not billion, million with an M. And they do have a very strong balance sheet, $667.2 million, which is, good to see. A2 Milk have always had a really strong balance sheet, and nothing changes there. Operational highlights. So we see the China label infant formula sales down due to inventory rebalancing, but consumer offtake is strong and market share has increased to a new high. So it's good to see that they've rebalanced their channels. A2 Milk is a premium product, and they should be ensuring that their product is fresh in order to keep that strong brand that they do have. And it's good to see that despite all the challenges, their market share has increased to a new high. English label IMF, the sales are down, but at least there's improved trajectory within the ANZ, Australia, New Zealand reseller channel. If we look now to the ANZ liquid milk, the market share's up and it's increased to a new high. The USA milk channel, we're going to get to that later, but it has been underperforming, and they have lost a distributor in the club channel. And the MVM, the Matura Milk Valley acquisition has been completed, and it now does contribute to revenues. In terms of their strategic update, the actions that they have done to increase the inventory has had a positive impact. That is reflected through increased brand sort of market share. Brand health metrics have also improved, which also goes with increased market share, and their growth sort of strategy is off to a good early start in terms of, I suppose, turnaround. FY 2022 revenue has been improved, but earnings have their guidance of earnings have stayed the same, as they do continue to intend to put money into growth and marketing. In terms of the Chinese sort of market dynamics for baby formula at the moment, unfortunately, birth rates have been decreasing, and as a result, that has decreased the volume of infant formula being purchased, and it also has decreased the market value as well. So this is a headwind on A2 Milk's business for sure. However, they are continuing to grow market share due to their strong brand. So in some way, this is kind of counterbalancing this headwind, although obviously it is still a sort of negative tailwind for negative headwind, for A2 Milk's business. Looking now at the sales, well, we can see that it decreased year over year, as we talked about. However, it's actually a solid increase from H2 of FY 2021. And as we already spoke about, the company's been doing a strong push to rebalance their inventory. So this means they've intentionally sort of sold less baby formula in order to bring the inventory levels down to increase the freshness of the products. And look, we're starting to see early signs of a recovery here for A2 Milk in the China label infant formula. So look, we're going to have to keep an eye on how this is going to play out over time, but they are starting to see a turnaround, and their brand health overall still looks strong. We can also see that the marketing spend in China has been paying off. Brand awareness is at a high. Ever trialed awareness is at a high, and also the A2 Milk brand in general is being used as the number one brand for mothers and fathers. It's at 12%, so that's the highest it's been since January of 2019. So it's good to see them marching into China, and it's good to see that those marketing dollars are counting for something. We can also see in English label there are some early signs of recovery. Compared to FY 2021 in the second half, we can see that the ANZ English label has also it's increased compared to H2 of last year, and similar with the CBEC channel increasing from H2 despite the challenging conditions. But we can see that the market share has decreased in these channels. The A2 Milk management team are putting it down to the reduced promotional activity and also the reduced supply due to them wanting to rebalance inventory levels. In terms of the ANZ liquid milk sales, we can see that revenue growth was pretty much flat year over year. I would have liked to seen a little bit of growth here. However, well, especially due to the COVID lockdowns, but we are starting to see these alleviate now. So it'll be interesting to see how we go next quarter. But probably more importantly, the market share has increased steadily compared to this time last year and also 6 months ago. So honestly, it's just, this is a slower growing part of the business, but it's fairly steady. And yeah, there's not much else to say here. Just slow and steady, slowly gaining market share, slowly growing revenue. Well, kind of flat revenue growth, but I think if you look out 5 years, we'll probably see like steady growth. USA, it's honestly pretty disappointing here. They are sort of lowering their EBITDA losses over time, but then that revenue isn't really growing, and that store count has really stagnated at that sort of 26 to 27 million range. Their revenue decreased by 5% to 32.4 million. Look, it's just not really working in the US by the looks of things. Yeah, I wouldn't count on the US segment doing well. So in your evaluations, I'd probably put a pretty low growth rate on it. Yeah, it's just not really gaining traction over there by the looks of things. But I suppose time will tell if they can turn that around. But yeah, I'm not too optimistic about that. And then obviously A2 Milk got the MVM investment. It made some nice revenues for them, almost 40 million, but it did produce an EBITDA loss of 10 million. I do expect this business will end up making A2 Milk profits in the future. Just give it a couple of years and it'll be profitable. I'm pretty confident about that. It's a goddamn milk factory. And you should see the prices of milk at the moment, especially particularly in New Zealand. I've heard that they have been increasing milk prices, which makes sense with this high inflationary environment. So in terms of guidance, we are looking at improved revenue for H2 over H1 of 2022, and we're also expecting significantly higher growth in terms of the China label here. We're expecting significantly higher growth in the English label. We're expecting incremental sales growth in the Australian liquid milk. And we're also expecting sales growth in the USA liquid milk. So overall, we're going to be looking at higher guidance. We should be looking at slightly higher gross margins. However, like a lot of these extra revenues are just going to be, and the profits from these extra revenues will be reinvested back into the business for marketing purposes in order to keep growing that market share. But overall, guys, we can see a bit of a turnaround. This is I suppose a nice change from the tone that A2 Milk has given in the past. But guys, make sure you like this video and subscribe to my channel, and I'll see you in the next one.